The first question is, how much
Mhm.
importance can be attached to investment sentiment? Is that not the reason you're doing fundamental and technical analysis?
Yes, so this is the thing. You always want to balance your thinking, okay? Because there's what they call, which I will just go quickly here now and say what they call confirmation. It's on my website, and I've spoken to you about this before. Confirmation bias, okay? Confirmation bias is very, very good, and you want to always counter this in every decision you make. Fundamentals tell you yes, what it is, okay? You're right. Sometimes the company is doing very well, but the business model, is it great or the best? If the business model is good, the fundamentals are good, their finances are good, everything on paper is fantastic. But you just also want to balance your thinking. Not that your fundamentals are wrong. And if fundamental study is good, it means the company is good. And if the business first is the business model, if the business model is good, then you're keen, the business is going to work and it's going to be fun. Everything will be fine, no issues. But just to balance your thinking, you want to look at sentiments as well. Okay? Because that kind of gives you a bit of drive in terms of some of the prospects the company may have, you may not be aware of. Some of the technological advancements the company may have had, you're not aware of. Some of the big and huge mistakes they may have had, you are not aware of. So all that information you want to gather. So confirmation bias is what you want to also know, because the tendency to search for, interpret, favor, and recall information in a way that confirms or supports one's prior belief or values. So confirmation bias is sometimes you just search because you believe the company is good and Microsoft is good. You just make everything all your research is all positive. All your research is buy it. All your research is a great company. But you want to counter that by just checking what are other people saying and is it really correct? And you must be open to that. Don't stick your guns and say this company I bought is the best, is the right, and there's nothing anybody says that will convince you otherwise. Be open and don't let this cloud your judgment, and it can really hamper your decision making. So read up on it on Investopedia as well.
Thank you very much. The next
Okay.
question says, would ETFs be analyzed with the same model as it is a collection of assets?
Yes. So you want to also check for ETFs as well to see exactly the ETF in play. So ETFs basically are groups of companies, and within the group of companies, you have various companies that are strong, some maybe not so strong, depends on the mix you have for the ETF and the ETF you're interested in. That would also have a yield. That would have some kind of market cap, of course, the price times the number of shares that they have, which is very simple. You also want to check their coverage. For ETFs, you want to check their coverage. You want to check the countries that they're invested in. Are they stable? And most times the investment fund will tell you if it's a high risk or low risk, already tell you, or you look at the yield and you can see their performance over time. So basically just go through the list and you could easily assess to say, okay, this ETF seems safe. And again, if you buy an ETF with lots of companies in them, most times the companies will show you the top 10. Check the top 10. You have to research those top 10 companies. Do you know them? Do you know what they do? Are they profitable? Because what you don't want is you buy an ETF where you have 5 are doing so well and the other 5 are pulling the whole top 5 down. And then you always have an average, very mediocre returns of 2-3%, 5% or less. So you really want to make sure that the ETFs you're buying there are solid companies in there and they're all doing very well. So you can be having 15%, 10% on your profits.
Thank you very much.
Okay.
Thank you very much. Another question here is, where or how do you get the book value?
Good. So the book value, I had given a clear. I know I didn't mention that as well, but that's part of your fundamentals as well. So for the book value, as an example, you always want to go by saying the book value is simply the difference between, your net capital, that's your book value. So if I go to the balance sheet, now that is your book value. Your book value is simply your total assets subtracted from the liability, which is this. So this is your book value. Okay. Now to get the book value per share, you just simply divide this value by the number of shares that have been sold. And that gives you the book value per share. As you can see, sometimes they give you tangible book value per share. So in reality, you say this is the price of Tesla. Should be the price of Tesla. Okay, that's what the book value per share means. When you do book value per share, the book value itself is just the total assets minus liability. So you can say asset minus debt. That's your book value. Okay, so if that's positive, that's a good thing. But then you now ask yourself the question, okay, really, how much is that if you remove all the liabilities from a company, which sometimes is impossible? As you can imagine, Tesla is growing quite significantly and they're all using debt to finance this business. So it's not possible for them to not have liabilities. But what book value says is if you take the liabilities of the company away, what exactly is this value? So sometimes what you find out that the book value usually per share is usually high, but then sometimes the company may have a little bit of retract, or there's COVID or something happens, and you find out that the book value of the company now equates to the actual share price. Then that is a huge bargain. As you can imagine, you're buying the company in its pure state, where it means it has no liabilities, but the share price is just now low enough to equal the company's value without any liabilities. That is a big bargain if you get a company like that and you buy it. Then if the company rallies back up, you bought them at a huge discount. Okay, so if that makes sense.
Yeah, thank you very much. Thank God you just analyzed use Tesla as your example, because the next question is on Tesla as well. It says, when the value of CSP / BVPS is greater than 30, how do you justify Tesla is still valuable?
Okay, good. So now that is where you now come in. If that is so high, if it is so high like that, like the multiples for Tesla from its book value is so high, of course, like I said, think about it. The book value is per share is meant to be high for Tesla because currently they're running on a lot of debt to finance this expansion that they have. So their liabilities automatically be high. Okay, and hence, if their liabilities are high, their total asset minus that to bring their book value low. And if you now divide that book value by the outstanding shares, it even brings the multiple for the book value per share or the actual share price to be really low. So, is it justifiable to have them run at 30 multiples and buy them now? Well, this is the question, because also your share price most times is driven by demand. If the product is good and they're doing very well, sometimes fundamentals are not really looked at and the people are running towards buying the stock. But remember that book value is just one way of categorizing a company. So if the multiples are so high, I would still say, in my own opinion, I still see Tesla as high risk, because high risk in the sense that it's really running 30 times multiples and it's still climbing. So if it's going to retract, the retracting will be heavy, as you can imagine. So this is my own take on it. Like I said, everybody should have their own personal opinion about it. But if I have $4,000 today, will I buy Tesla? I will keep Tesla. I will still buy Tesla, but I will buy Tesla with one eye open. That's how I will put it. So for me, that's why I call it high risk. If I buy Tesla now, it will be high risk. But if they pull back for Tesla and talk to $1,000 today, I would buy $10,000 worth of Tesla. If I have if that kind of cash is available, I would do that. Because to me, the product is great. The demand is high for Tesla. Although my concern with Tesla is going to China now, basically I suspect technology will most likely be on a lot of China cars very quickly, maybe in the next 5 years. And with that window Tesla shares over 5 years, maybe, because going to China means it's difficult sometimes to protect your intellectual property. But if they come up with a strong business model, then yes, Tesla would thrive. Same thing like Microsoft or China or Apple. Apple is producing also their phones in China, but Apple is still strong today because, again, a lot of the capital is in the US and the UK and other European countries and China. So even though there's intellectual property or theft, nobody would sell their new product as an Apple product, if you get my point. So nobody will buy it. But for Tesla, somebody comes out with a correct Chinese car now with Tesla model, everything running underneath it. Trust me, because they already have strong products like Toyota, Hyundai, also not Hyundai, but other products like NIO especially. You will buy it, you still buy NIO. Just that America will ban the company from importing the car into America, but they will still export it to other countries. So, yeah, you have those debates. So it's not is not a straight line graph. Just say that.
Thank you, Ogechi. Thank you very much. We have a suggestions of some stocks for you. Think I'm just going to mention all of them and then give you the chance to pick which one you want to analyze and in the order you want to go if we have time.
Okay.
Now we have Apple, we have Boeing, we have Overstock, we have Coca-Cola, NEO, and Wirecard.
Okay, let's go Apple. Apple is interesting. Let's look at Apple together. Let's just see what Apple is. So forget price action for now, because trust me, even if Apple is, let's not call it Apple, another company. If you've done your fundamentals and everything at the back end and the price is $1,000, you buy it because the company is good. So just forget price action. Don't be deceived by price action, please. Okay, so let's go to fundamentals of Apple. Let's check Apple. Let's go to market data quickly. Remember, you can also do this on Yahoo Finance. You can do it on investing.com. There's so many other sites. I'm just using IG because I'm familiar with it as well. So first, description of the company, what they do. Sometimes this description changes. Sometimes it stays the same, but you know what Apple does. You can also get more info on general blogs or sites as well to get more info on what the company does. So we know what Apple is. Also operating system, iCloud, Apple Pay, range of accessories, supports, offerings, so on and so forth. So we're good. Then we also check quickly check the fundamentals, which is absolutely beautiful. When you see a market cap that high, it doesn't really tell you much. It just tells you that's the value of the company. Remember, it's just the you're looking at the price per share times outstanding shares sold to. Okay, that's what it is. Dividend per share. Return on investment, 22%, that's not bad. Profit margin, 21%, that's not bad at all. Normal PE ratio is high. That's a 39 PE ratio, which is the price to the earnings. So every earnings per dollar, the multiples of 39. People are willing to pay 39 times the multiples for the stock, so which is really high. So I go straight into the fundamentals to check. Dividend is okay. Look at that. Dividend per share is $3. That's an attraction there. Okay. But remember that is divided by 4 for the quarter, okay, per share. Look at that return on equity is 55%. That is beautiful. That's a good one. Return on average asset is that. If I go to return on equity, just put it down a bit so we can read a bit of description there. So is the amount. Look at that return on equity, average equity. Let's just quickly look at that together. It's the amount of net income return as a percentage of the shareholders' equity. It reflects the management team's ability to use shareholders' funds to generate earnings growth. But just gives you an idea of what is 55% is really good. You also want to look at the earnings per share. That's amazing. That's fantastic. Yeah, $13.6 for the earnings per share. Okay, that is really good. Normalized P ratio, I talked about as high. So the gross margins, all positive, which is fantastic. Price to cash flow, price to earnings, all looking good. And then you can see this is just price action as well and volume. Okay, so you can see that. And then I go into the finances. Look at that. That is a beauty. And that's why I like using IG, because you can see that straight away very quickly. That is an absolute beauty. Income statement is fine. But I'm not really bothering that. For me, it's free cash flow I'm more keen on. So straight away, I go to the free cash flow to see. I look at the capital expenditure. I mean, the operating cash minus the capital expenditure. Difference between both. Look at that. That is beautiful. So that's a lot of cash to run the business. And check out the history. Look at that. That is such a beauty. That is just too good. Free cash flow is amazing. Okay, so for me, once the free cash flow is good, that means they can run their company very well. They can pay me good dividend, and even if the company is running into issues, they have enough cash to weather the storm. Okay, for me, that is a big plus. All right, for the balance sheet, well, if you want to know, look at that. This is positive already, but you can see total assets is 338, and you can see that the liability is 248. No, total their net is 90. Okay, so which means that they have. Their debt to loan ratio is a little bit high, but in the sense that you know that they can weather the storm. Okay, but also remember that I'm also checking my confirmation bias because I like Apple a lot. So I'm also going to read up and check some more information on Apple, where they're going. Do they have more projects in place? Because the iPhone starts to wear out and there's no new design coming in place. It becomes a problem because one of their huge asset cash generators. You can also then check now. The next thing will be what? We look at the finance price action. You can already see that. Technical analysis, well, they're all lagging tools. So I'm not too keen on technical analysis, but I've explained what it means. Then also you can look at the word on the streets. Okay, so first now go to check Yahoo Finance, which is for me the big one. So I just quickly go in here and I check Apple. Quickly check Apple. So if I look into Apple, so I believe you're following me now because you know what I'm doing. First, I look at the sentiments here. Check that out. Again, it's a strong recommendation on the buy. Although it's dipping a bit, but still strong rating. Look at that here, recommended 2.2 on the buy. The average in here, current price is 496. Average is 425. Not too bad. I bought recently at 409. 425 is not too bad for me. It's okay. You also quickly now check very fast the holders in the company. Now look at that beauty. Look at that. Vanguard is 328,000 million shares. BlackRock is in there. Berkshire Hathaway has 245 million shares. That's equating to 89 billion. So guys, you know, when you see our staggering numbers like this, it just makes you think that these guys have their wealth in this company. And if somebody tells me when I mentioned to the group that Apple is cheap at $383, some people thought I wasn't maybe thinking straight. But I mean, guys, you're looking at these numbers. This is shocking. Actually, I didn't know that Berkshire had up to 245 million shares of Apple. So guys, and then there's going to be a stock split into 4, guys. This is going to be split in August 30th into 4. So if anybody doesn't have, personally, I'm not saying you should buy it, but if anybody doesn't have Apple in their portfolio, well, you think about it. So guys, and also you now put yourself, is it low, high, or risk? I mean, if I have a pension fund, where would I put this Apple? Would I put Apple moderate or high? I would put Apple into low risk completely, in my own opinion. And in terms of short term, long term, for me, it's long term. Okay, because the company has a lot of cash to go into R&D. They can buy up patents. If the product is good and it's worth investing, these guys will grab it with their eyes closed because not many companies have a market cap of $2 trillion. Okay, and then we pick another company again. Is that clear for Apple? I don't know if I'm...
Yes, that's clear. But one question just came in that I think to take quickly. It says, when is the best time to buy Apple, before or after the split?
For me, the split or the before or after the split makes no difference. But what I mean by makes no difference in terms of the price or the value, because for instance, if Apple today is hitting, and Apple is going to hit maybe 550 before the split, that's my estimation. I may be wrong, but let's see what analysts are saying in the first place. Okay, they're saying high is 515. Look at that, high is 515, and I don't doubt that reaching there very quickly. Okay, so for Apple, the reason is that if you split it to let's say Apple is 500, you split it into 4, is 125 per stock. Now, like I said, if you have one stock of Apple now at 497 or 500, it means that by the end of August or 30th of August, you have 4 shares, but they're just going to be each 125. So it doesn't make any difference, the value. But now imagine where I can't buy 1 share of Apple because it's too expensive, or I call it too expensive because you're buying less shares for that number. But then Apple now splits into 4 and 125. I mean, a lot of millennials will buy it. A lot of people will rush into it. Plus, when you now think about it, over 6 months, people who are just waking up into the stock world will think, oh, Apple is really cheap. It's 125. Apple starts to edge into 150. People will be thinking, oh, Apple is growing, or Apple is increasing from 125 now 150. You actually forget that just 6 months ago, it was actually 1 stock. But now Apple starts to edge towards 200. Remember that the people who had it before, they've literally nearly doubled the earnings they've had before. So this is what happens. It drives people to want to buy more.
Bamboo doesn't have all just the way you're able to show the multiples and all on Bamboo, on this IG. Bamboo doesn't have that.
Yeah, it's all free on Yahoo. It's all free on Yahoo. Everything in IG is free on Yahoo. It's same. Everything I've shown you here in terms of the price action, market data, is exactly what I've just shown you now. Exactly the same in Yahoo. The summary, the finances, the fundamentals, is all here. Everything is all here. Look at that, the net income, and so on and so forth. If I go to the cash flow, look at the free, they even calculate it for you. So they tell you what the free cash flow, and you can see Apple has been having a free cash flow for years, and now it's 71. Okay, so you have access to this data very free. You don't need a platform to give you the data. And even when you go through Yahoo, or if you check I would advise, please, if you register on my site, to my website, register to my website. I have here a list of websites you can go to. If you go to my forum here, you have here list websites to research stocks. I just made a list of all of them. You can check Yahoo, Seeking Alpha. Although Seeking Alpha don't have it, they give you more info. CNBC, you can have it. Investing.com is a really good one that can give you a lot of details. Market Watch is another great one as well. The Monthly Fools, you can see, yeah. But Yahoo Finance is, to me, one of the best. I use that a lot.
Thanks.
So Bamboo is good. Bamboo, you can use it. For me, the key thing is being able to have access to buy this. There are lots of people using Bamboo on the group that you can connect with if you have any.
All right, sure. Thank you.
No problem at all. So is that, I think the more stocks, there was one other stock, Sarah, you mentioned. Did I?
Yes, we had Coca-Cola, we have NEO.
Coca-Cola is a good one.
And someone else mentioned Wirecard.
Oh, yes, Wirecard. Okay, so Coca-Cola as an example, monthly chart, as you can see, very good, no issues there. Well, forget price action first. There's always now guys, you can see that for me, there's always a temptation to do this. Once you start getting familiar with researching the companies, sometimes you know the name and you expect that the balance sheet and fundamentals should be good. But like I said, please be disciplined. Try not to fall for this. Even though you see this and it's exciting, and you can see that dip, okay, it's exciting, calm down and always just check, please, the fundamentals first, okay? So like I said, you can do this again in Yahoo Finance for the question that was just asked. So again, I check the description of the company. Sometimes you think you know about the company, but it's better sometimes to read up where they cover. As you can see here, the company segments include Europe, Middle East, Africa, Latin America, North America, Asia, bottling investments and corporation. The company also owns market ranges in non-alcoholic sparkling beverages, yeah, including Coca-Cola, Diet Coke, Fanta, Sprite. Sometimes both things only Coke they have, but you can see that clearly there. The company also owns licenses and markets over 500 non-alcoholic beverages, 500, yeah. And the company also markets, manufactures, sells beverages, concentrates as well. Refer to beverages-based syrup, including fountain syrups and finished sparkling and still beverages. Okay, so Coca-Cola is quite broad. So that's cool. I know the business. You can see some news here, but let's keep sentiments first to the side. Now check out their fundamentals as well. 203 billion market cap. Also to note that while you look at this, you can skip to this, and also in Yahoo Finance, you can see similar market cap, companies with similar market cap or so. Okay, or same sectors. Sometimes you see them here. You can also research more companies yourself. Okay, so you're not just looking at one, but you're also checking out more. Okay, so I go straight to the fundamentals. Market cap is cool. Dividend, they pay 1.59 divided by 4 per quarter. You also look at that, the return on equity is 49%, which is almost similar to Microsoft 50%, which is fantastic. You also see their earnings per share, 2.3 per dollar per share, which is not bad. You also look at the nominal P ratio. The multiples is high. Sometimes high multiples mean the company has potentials for growth. Sometimes low multiples mean, it could mean that the company is working its way up, or it's in an average forming or phase. But again, you have to balance it with sentiments and information about the company too. Price to cash flow, price to sale, more accounting knowledge about these things. The more you read up on them, I'm not telling you I'm an expert in exactly each and every figure here and what they really mean and how they mean and how they impact on the company positively, but I just pick up on the main ones, especially the return on equity. Okay, so Apple tells Court Epic requested special treatment. Okay, so as you can see, that info just came in now, and that informed my knowledge about the current case ongoing with Epic and the Apple. So this is how you keep track as well. Okay, so I fed in that Apple is saying they're asking for special treatment for Epic. So that tells me very soon that case might be knocked off the courts unless things change dramatically. Okay, and also, as you can see, the price action here. But price action is the last you want to do. You can look at this at the graph. But that gives you a little bit of hint, small confidence that, look at that, it's 52%. So they're looking at the 12% discount. But the last 26 weeks is 20% down. So if you buy it today, you're buying at that discount. Okay? But just have that at the back of your mind. That's not the focus, really. Then you now check on the financials. I like that as well. That looks good. Balance sheet is okay. Income is strong. And then the cash flow for me is what I'm looking at. So I'm looking at the operating cash flow. As you can see, that minus the capital expenditure. Please note that, or if you just go to Yahoo Finance, I'll tell you directly, okay, which is positive. And it's been positive over the years. And you can see the delta is a lot because the capital expenditure is minimal compared to their operating cash. Okay, and then I'm looking at interim. This is June as well. Look at that. Okay, here there was a bit of a rough patch here in 2020 March. But this is the interim, so this is quarterly. As you can tell, the March is obvious, COVID. December was, look at that beauty. You can see that in December. And here you can see June. So of course, still running till the end of the year. We'll see how they go. But as of last year, they were strong. Okay. So for me, that's fantastic. It means that good dividend payout, they'll have no issues. Because Coca-Cola itself, the flavor has been steady. They've only expanded. And they don't need to do anything else because there's nothing else like Coca-Cola. So Coca-Cola itself would remain the same and a drink that everybody would want to have for a very, very long time. So it sounds to me like a very stable company. But, let's also check. Money is there. Price action, we've already kind of had a hint. Technical analysis, well, like I said, is lagging. Sentiments, word on the streets. So let's now check again. Apple, Yahoo Finance, Coca-Cola. Remember, Coca-Cola has a KO as a sign. So with time, you begin to know the symbols. Okay, 47. Let's check the holdings, the holders, sorry. Berkshire Hathaway, 400 million shares. Is that a beauty? Equal to 17 billion. He's the top guy in Coca-Cola. Okay. Vanguard Group, BlackRock, I mean, these guys. So, JP Morgan, Morgan Stanley, I don't think they even have enough to buy because this guy has a lot already on his plate and he's not giving it up anytime soon at all. And you can see the percentage of it. It has almost 10% of Coca-Cola. Mutual funds as well. You can see how much pension funds and stuff are in Coca-Cola. So if you buy this Vanguard now, you're probably buying a bit of Coca-Cola as well. If you buy that SPDR, you can buy that ETF as well as a fund. They already have some shares or stake in Coca-Cola as well. In terms of sentiments as well, you can also see analysis too. Some earning history, the trend, and estimates. December 2020, they can give some estimates in terms of the earnings, in terms of the growth, current quarter, current year, next 5 years, past 5 years, some sort of estimates, rating here, so on and so forth. Okay, a high is 60, they say, which is going back to the original price. Currently, is that average is 53.55. So the growth may be a bit slow until things pick up because, again, as you can imagine, think about it. Always think about it. Theme parks open up, Disney opens up, amusement parks open up, cinemas open up, people will buy more Coke, orders will increase. So once the vaccine is in place and life goes back to normal, of course, the intake of Coca-Cola would pop very fast. But in terms of it dropping, right now, if it dropped to this point and it's averaging out, that means that households will still maintain their current drinking Coca-Cola rates and it will just continue simmering that way for now, unless something drastic happens, sorry. So, clear? Okay. Coca-Cola for me, high, low, medium risk. Now is you to class it there. For me, Coca-Cola is still low risk. Well, I'll call it moderate risk. But if you're buying it at a 20% discount now, I mean, that's a fantastic deal, in my own opinion. And again, if Warren Buffett still hasn't sold any of his shares, I mean, Coca-Cola is a stable drink. So I would, in my opinion, I would have Coca-Cola as part of my investment, but for the long term, because that's when they will definitely pick up. As you can imagine, 40 to 60. That's a good price for me, if you ask me. So Dow is up again, 190, 500. So good. Okay, so that's market close now. So we can see that everything is short. So for those of you who don't know, the US market has closed now. So as you can see, if I go to shares, most of the shares have closed except the ones that are all sessions. All session means that they trade in all sessions of the market. So afterwards, they still keep trading, but the rest of it are closed. But the UK closes at 4:30, US closes at 9 o'clock.
Yes, thank you very much. Boeing or NEO or Wirecard? Your
Good.
choice.
Okay, so let's look at NEO. NEO is a hot potato. Now everybody's on NEO's case. So let's look at NEO. So forget price action, like I said. Let's check NEO out. Market data. So you see the difference. Why difference? So let's look at NEO first. People need to understand. I know some people may not even know what NEO. People just know that NEO is the car company in China. But let's look a little bit more into detail. So NEO manufactures and sells smart and connected electric vehicles. Manufactures autonomous driving, integrated next generation technology, artificial intelligence. Manufactures ES8. So I can tell already one of the models very quickly, which is a 7-seater all aluminum body electric utility vehicle. That tells you something. How many people drive that sort of cars? Where do they drive them? In the US, in the UK, in China? It's also equipped with propulsion systems. You can check that out as well. What does that mean in Google? Which is capable of accelerating from 0 to 100 kilometers in 4.4 seconds. Average cars, for those who are car enthusiasts, cars that go from 0 to 60 miles an hour in 4.4 seconds are fast. Okay, and everybody would love to drive such cars. Delivering a new European driving range of almost 305 kilometers for the battery, maximum of 500 kilometers in single charge, which is not bad. Also focused on providing vehicle charging solutions as well for Power Home, Power Swap as well, Power Mobile, Power Express services as well. So they swap your batteries. So instead of you having to run one battery, you can go for a swap, which is great. Also offers value services, utilities, users. Also statutory third-party liability insurance, because the liability insurance as well, car damage insurance through third-party insurance, repair, routine maintenance services, courtesy car, plenty repairs. I mean, so reading this alone, I just know that that's what NEO, and it's looks like a solid car company that have got their acts together. So that was one. Then I'm now trying to check the finances. Okay, look at sentiments again. Here you can just have a peak of sentiments. So here in IG, you can see the number of people that have the stock, 251 to 500 people in IG. And today, last hour, 86% of them sold. Today, 55% sold. But this is people's individuals. It depends on what goals they have in play, okay? And then sentiments for brokers. So you check their fundamentals first. So guys, have a look at these fundamentals. Now, this probably would make you think, okay? So look at their market cap, 16.31 billion, which is not bad. Again, like market cap, like I said, just the share price multiplied by number of shares that is in the market. And if tomorrow the share price drops to $10, that automatically drops very fast, okay? So that just tells you the strength of the company, and that's it. But let's break it down into bit. They don't pay any dividend in the first place. As you can see, their return on equity is minus 4,000%. Okay, so anything you're making on profit for NEO is just price action. But in terms of profitability, return on equity is minus 4,000%. Return on asset is 67%. Okay, return on investment minus 180%. Okay, the earnings per share is negative all through. For me, everything looks, not very rosy. But like I said, it's expected as per a new company, okay? So all that multiples are negative, as you can see. And quickly here, you can look at the price action. Now, guys, the joy of what I'm doing here now is that I'm just teasing your brains, eh? So please go to Investopedia, read up on the meanings of these terms and how they affect the companies. Just now you know what to look for quickly, which is good. Go back and just research more on these things so that you know what you see. If you see 5% here, what does that mean? If you see 10% here, what does that mean? Research more on these things to shock your mind on how knowledgeable you will be on the company. Okay. Okay, so that's the fundamentals, the fundamentals. Let's also now check their finances. Oh, no, look at that. So first of all, NIO, for me, you're looking at income statement is even increasing. The balance sheet, well, their cash flow as well. Okay, so for me, cash flow is more key. I'm keen on the cash flow. And again, guys, what you're learning here is applicable to your company as well. If you look at a company balance statement or your company's cash flow, you can tell if the company is doing well or not very quickly. Okay, so everything's applicable. What we're analyzing here are businesses as well. It's the same thing with the companies you work for. So guys, look at that. Okay, so as you can see, it's very obvious that they don't have any money to run their business, but that's because they are a new company and just starting out. So of course, they are likely to be in debt for a while until they start turning positive. Okay, so if you're in them when they are cheap, then you're likely to make some profit. Okay, if you look at their balance sheet, let's just be complete here. Look at that negative here, and it's simple. You can do the calculation yourself. So it's the total asset minus the total liability, and of course that's minus. So that is 14 minus 20. Voila. Okay, and you can see that therefore the tangible book value is already negative, because if you have that divided by the number of shares that's sold to people, is already minus. Okay, exactly. And then if I go to the income statement, which income statement most time could also be deceiving, because every year you see the income growing, but of course, like I said, it's a business that's growing and it's just starting out. You always see this on the starting business, always. Okay, and then after that, I'm now keen on looking at the sentiments to see what is really going on. So as I always do, I like Yahoo, so I'll go to Yahoo again. Okay, so now let's just go straight to the whole. Guys, look at that. Baillie Gifford, which is a very strong company. They have 97 million shares of the company, which means they really believe in it. They're almost 61%. BlackRock, Vanguard. So when you look at these holdings as well, then you begin to think, why are these guys? Goldman Sachs, they have about 12 million shares of NIO. Then you start to think mutual funds as well are heavily invested in the company. So you start to think, why are people so heavily invested in this company, even though yet they're not profitable? Then you start to ask yourself the question in terms of the business model of the company. The car is in China. Plus, things could really go up with them. And again, if you go to YouTube now, I'm on sentiment here now, so I'm just free to just skyrocket as in go as far as possible to check NIO. So I'm looking at NIO. Somebody has some comments here on NIO. Testing with NIO compared to other products as well. Are these cars are they concept or are they real cars on the market? The drag race done? Have there been competitions? Not competitions, but like drag race, people taking the car for a test drive, how fast does it go? Things like that, as you would have for Tesla. So just a similar thing. If you go to Tesla, Tesla is like Tesla Model 3, you will see like lots of videos, reviews, drag races, performance of the car, people screaming and shouting how fast it is, charging and all the works. People beating Teslas with Ferraris. If you go to CarWow, you can see lots and lots of videos on Tesla. That tells you that the car itself is, it's solid. There's NIO, there's Tesla. So you now ask yourself the question, okay, then should I invest in NIO now or should I wait till it becomes profitable? And that goes back to the question of, is it low risk, moderate risk, or high risk? Where would you place it? Where would you place NIO? In my opinion, NIO is still high risk for now. You can call it moderate risk because you can see the investors in it, but the fundamentals ultimately tell you everything. So for now, it's still high risk because NIO can drop from 14 to 8 and is expected. You're not going to think there's anything wrong with the company. If Apple drops from $496 to $300, something maybe is wrong fundamentally. Something's happening. Okay, if NIO drops, is expected. So if you go into NIO, you're going to NIO with your head clear that, well, it's the future. Would it be long-term, short-term? Your choice. So for me personally, it's high risk. Some other person would think it's moderate risk because they believe the business model is fine. They think the car will do well to sell if it takes flight in China, which already doing in China. And then you also want to now look at other competitors, comparing it with EV cars from other manufacturers, but nobody is yet there. But NIO is taking a head start. So if Tesla is ramping up, NIO may be the next ramp up. But with the issue with China and US, if that's resolved, then NIO can be imported to the US. You see game changer big time. We had another question, another stock as well.
Please analyze Boeing. Someone is really interested in Boeing.
Okay, let's just do Boeing as somebody has requested, please, and then we call it a day. So that's why I decided to set up sessions now. So there's one on the 31st of August. So please sign up. We'll do more analysis. We'll do more checks as well. So Boeing now is there at 167. Now, just to disclaim as well, I bought Boeing at $330. So I'm currently 50% down-ish or so on Boeing. So I took that hit because Boeing was climbing up to 400 and they were heading very fast, and COVID hit them and they dropped a little bit to 330. I got in there, but currently it's still at that price. But I've left it for me because Boeing to me is a long-term hold, and I think that if they can get the 737 clear, they are fine to fly. And if COVID vaccine is open, I think there'll be flying will resume, but maybe not as much as before. But I think it will take time, before 3 to 5 years, for it to go back again to original price. That is my own analysis. But again, if you look at the fundamentals quickly, so I think everybody's seeming to get used to it now. It's my assumption. I think so, in terms of what to look for, what to check for. So if you go down to the fundamentals, market cap, dividend yield is good. As you can see, the dividend per share is $8.22. That is really good. So the dividend is fantastic, okay? In terms of the return on equity, because it's low, as you can see, 0.5, which is low. Return on investment is 1.7 minus, so it's not as bad as it used to be, but as the previous NIO, as you can imagine the difference. Earnings per share, of course, is low. You expect that now. Boeing is still having issues. And the P/E ratio is still high, as you can see, but their profit margin is low. You can see that as well. Then if you look at the price action, as you can see, I told you that I'm almost 49% down, as you can see, over 52 weeks, which is the case. Okay. But for me, Boeing, I'm not too worried because I believe that it's a huge company. It's the #1 American company for flying. So, and it's affecting the aviation industry across the board. Now, it's not just a single like Spirit Energy or Delta Energy. It's a company that manufactures engines. So hopefully, COVID passes. The new norm is back to flying, and we have people placing orders again for new Boeing flights. As you can see, the cash flow is positive. See what's happening now to the cash flow. Okay, so Boeing is starting to struggle. As you can see, positive cash flow all through, but now they're having some issues. So that's worrying on one hand. But again, if they get a bailout, then they can manage, but their debt increases. So if you look at their balance sheet too, see their total asset, and you can see their total liability. So again, that takes them into minus, for their total equity. So, but you can see they've been positive all through. Had some rough patches here and there, but they are fine. Well, they're low now. Not the best. Income statement, as you can see, drastic drop. They're going back to their almost 2014 lows in terms of income or revenue. Here as well too. So not too bad. Interim report, if there's one, same as well, revenue for Boeing, and then you now also want to check what the fundamentals are. The sentiments. You can do technical analysis, and you can analyze the graph as much as you want. If you want to, you can put in pivot charts and see what it is. But as you know, if there's a news about the 737 passing the test, Canada is wanting to do the test on the 737. Once that comes through, then you know that. Okay. In fact, why don't we just do a different? I know we have. Sorry guys, time or investing.com. Let's do investing.com. Let's use that as a different, instead of using Yahoo all the time. Let's use investing.com. Boeing. So always check with investing.com to make sure that it's a New York Stock Exchange. Okay. So here the same, you also see technical, you see forum, you see insights, you see financials, income statement, balance statement, cash flow, dividends, and so on and so forth. You see news analysis as well, see technical. So if I go technical as an example, technical can tell you what it is. A strong sell, they said in the hourly chart. If I put it on a weekly chart or monthly chart, they say it's a strong sell. And they tell you exactly why they've said so. With all the indicators they've used, it's all indicating a sell. And then if you check one good tool they have here is consensus estimates, which is quite good. They give you an idea of the projection here to say that they think that Boeing, worst case would be tending below 177. Best case would be above, in between 277 and 177. Okay, and it's neutral. So that gives you a rough idea. So if I ask you a question, why do you want to buy Boeing? I mean, you have a lot of story to tell me. First, the company, what it does. You can tell me about their cash flow, their fundamentals. You can tell me about the sentiments. You can tell me analysis, holdings. You can tell me. So if I ask you the question, why do you want to buy a stock? You should have a lot to tell me. A lot to tell me, especially on the part of news and on the part of fundamentals. So you should be well equipped with that information. And any recent information you found out, or the company's released some earnings or reports, all that should form your reason why you're buying the company. I believe we'll call it a wrap today. And I hope it was all entertaining and also informative as well.
Thank you very much, Okechi.
Okay, everyone. Thank you so much for attending. If you have any questions, please kind of subscribe. I want you please subscribe to the website. And then on the website, you can quickly send me a chat. It's easy that way, and I can deal with your questions if you have one. So do subscribe. I also have a YouTube channel, and I've also posted some of the webinars on the YouTube channel, broken down to different parts. Please subscribe to the YouTube channel, watch, and do subscribe to the group just to encourage me to get more videos in as well.
The next meeting will be on the 31st of August, Monday, 8 p.m. 31st of August, Monday, 8 p.m. Remember to subscribe and sign up to the webinar on the website. Thank you.